Greetings, members one and all of the Salivation Nation. Are you ready to party like Silver's 1999? Let's explore! Yes, that's right. Silver is moving dangerously close to $20 an ounce. In fact, we're going to take a look at the charts here, and we can see that it did fall short in terms of the actual spot price. The futures have it going over $20 an ounce. I'll talk about that momentarily. But it did not quite make $20 an ounce, at least towards the end of the day today, which is July the 20th, 2020. Yes, indeed. So not quite there yet. However, this here article from Bloomberg through Yahoo Finance begs to differ here. It says that silver futures are latching on to gold's rally, so the futures themselves rose above $20 an ounce to the highest since 2016 on rising haven demand and concerns about the supply of the white metal. Yes, believe it or not, there is an increased supply in silver, and we're seeing that from the premiums out there, and it's reflecting on the spot price and starting to catch up here. And we've seen this before in 2011. It does sometimes take a while. My feeling is seeing where gold has been in a while, it's long overdue for silver, but it's starting to play a little bit of catch up here to gold. But we'll see what happens. The tail of the tape will be time. Gold and silver have surged this year as the coronavirus pandemic roiled the global economy, spurring sustained demand for havens even as some lockdowns were eased. The outbreak has yet to be brought under control in many countries, including the United States, bolstering the case for holding the metals. Silver, which has just completed its best quarter since 2010, is setting an extra boost from concerns about supply and bets on increased industrial demand for the metal used in solar panels and other manufactured products. Now, I'll stop right there because this is an interesting sentence. We did see silver dip during the financial crisis as well, but this took a pretty big hit, under $12 an ounce, which adjusted for inflation I think was worse of a hit than it was when it dipped back in 2008 or 7 or so. So its recovery, though it is the best since 2010, really is getting us just above the pre-pandemic levels. So its measure should be kept in perspective on that account. Of the 275 disrupted mining operations globally, the most affected were gold and silver mines, according to S&P Global Market Intelligence. In Latin America, where much of the world's silver is produced, the pandemic has worsened, with Mexico recently overtaking Italy in the number of virus-related deaths. Silver will continue to be pulled higher by strong gold price and supportive financial conditions, Morgan Stanley said in a second-half outlook that listed silver as its number 2 pick, after copper, of all things. So there you go. This kind of gives some reinforcement to the case that silver is still being seen as an industrial metal, as a commodity there. As real demand also recovers through the second half of the year, this will add further impetus to silver's price, narrowing the gold-silver price ratio slightly. Silver futures for September delivery advanced as much as 2.7% to $20.30 an ounce on the COMEX in New York on Monday and settled at $20.19 at 1:27 p.m. Most active prices surged 32% in the 3 months through June. Keep in mind, most bullion dealers out there are starting to quote futures prices now as opposed to just regular spot price. But they're buying back based off of the spot price. So in other words, it's based off of a percentage above bid these days. So silver futures have climbed more than 40% since the end of the first quarter, surpassing the 14% gain for gold futures during that time. On Monday, gold for August delivery climbed 0.4% to $1,817.40 an ounce. As silver prices have rallied, investors have been piling into exchange-traded funds backed by the metal. Yeah, that's laughable, I would think. It's understood, common knowledge that they're really not backed by the metal. It's really not been tested, but nonetheless, it is based off the metal. How about that? Echoing a trend seen in gold. Global silver-backed ETF holdings rose 21% in the second quarter and hit a record this month. Keep in mind that the physical demand has increased as to the point where the separation between the spot price and physical price has become evident. We're paying high premiums for silver because of it. There's been a lot of frustration in the community because of it. On Monday, it took about 92 ounces of spot silver to buy 1 ounce of spot gold. That's a number that's pretty welcome to most of us out there. It is still very, very high, though. While that's well below levels of more than 120, in fact, I think it got up to 126 in March. It remains higher than the average of about 69 over the past decade. Some analysts said that suggests further gains may be in store for silver. Silver is currently trading at close to a record discount to gold, which should attract demand, Goldman Sachs Group Incorporated said in a note this month. Silver often tends to lag gold at the beginning of a precious rally and catch up to the rally continues, and investors look for ways to diversify. During the week through Tuesday, hedge funds and other money managers added to their bullish bets on silver, boosting net long positions to the highest since late February, according to government data Friday. That amounted to a larger than usual $636 million bullish flow spurred by the trifecta of rising haven demand, recovering industrial activity, particularly in China, and South American supply disruptions, according to Societe Generale SA analysts, including Michael Hay, or something like that. Unlike gold, silver's price is largely driven by a host of manufacturing applications, again as a commodity industrial metal. Morgan Stanley estimated that industrial demand makes up 85% of silver demand. Let that number sink in for a while, folks. We know that over 60% of silver has industrial applications, but the industrial demand makes about 85% of that, or of total demand for silver. The metal may be poised to benefit from a push towards less polluting energy technologies such as solar power, according to BMO Capital Markets. With eyes on recovering industrial demand in countries including China, the world's largest consumer of industrial commodities, some investors may be buying silver as a bet on new technology. U.S. Democratic presidential nominee Joe Biden outlined a goal last week of a carbon pollution-free power sector by 2035, a move that would require rapid acceleration in the deployment of renewable wind and solar power, as well as electricity storage, while continuing to rely on emission-free nuclear power. Silver-intensive areas such as 5G and solar technology could well benefit from any fiscal impulse, BMO analysts including Colin Hamilton said in a research note. More than $50 billion of green stimulus has been approved by governments thus far this year, over which roughly three-quarters has been in Europe. But perhaps more impactful has been the recent Biden campaign clean energy plan, most notably a zero-carbon power grid by 2035, which would see new wind and solar capacity built to displace the thermal generation. So, fascinating indeed, and regardless of what happens in the result of the election, a green technology is emerging and going to continue. I'm more of a proponent of the free market being the impetus for this rather than government mandate. But nonetheless, it's here and it's growing, and it's going to require more silver. And that being said, I think that can be bullish for silver as it being seen as a commodity and industrial metal out there, which means that if demand grows more than what they can produce it at, then I think we're going to see silver prices go up, and they could go up quite dramatically from here, and that would be a good thing for those of you who stack the metal. For those of us who stack the metal, I still have a stack, and I'm accumulating pieces, but at a very, very slow pace these days. I'm always going to I'm diversifying into gold and have been doing it since 2017 and will continue to do so no matter what silver does. But I think it's good news, and those of you who have silver, I think this is the encouraging news that you need no matter what the political situation, no matter what happens with COVID, because if COVID continues to wreak havoc in Latin America with the silver mining, we're going to definitely see some supply crunches coming, which is going to cause the metal to go up. And if the everything goes well and the virus disappears, well, we're going to see this shiny metal start to ramp up production, and with all these emerging technologies and the like, and if that happens, well, I think the prices could go up. In other words, there's potential. There's a lot more potential, I think, than not for silver. However, back to the title of this video, are you ready to party like silver is $19.99? Well, yes. It's time for celebration because I think there's probably at this point more justification and more reason to be excited about silver rising than not. However, let me put a little bit of a little damper on the parade here, because as we've seen in the past, silver is volatile as that commodity. Yea, though we see it as money, I see it as money, it's hibernating money. And the physical demand is growing, or it's up. This is the case, but silver should be higher than it is now, considering where silver demand is now, considering what's going on unique to this situation we are in with COVID. Notwithstanding, silver could take another dive. It could fall again. You have to always keep that in the back of your mind that it could fall. If it does, do not give up on it. That's a statement. In fact, I even posted a video about not giving up on silver. I know I haven't, but I like to keep a realistic view. So celebrate in moderation. It's time and it's okay to party like silver's $19.99. Hope you enjoyed this video. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.